Welcome everyone, and thanks for being here. Today we're closing out 2025 with a proper look at what actually happened in the markets and what showed up on the charts. This year refused to stay in one lane. Equities pushed higher, precious metals behaved like growth stocks, and effects reminded everyone that currencies still matter. Our job today isn't to predict the future, it's to build context, structure, and clarity going into 2026. Let's start with equities, the quiet winner this year, the FTSE 100. While Wall Street grabbed the headlines, London delivered substance, one of its strongest performances since 2009, with returns around 21 to 22%. That wasn't luck, that was structure, banking, commodities, defense, sectors that people counted out. Key point, the lesson isn't performance, it's narrative versus price. Price always tells the truth first. When people said Asia did well this year, that's only half a sentence. Japan led with tech, automation, and semiconductors, up around 24%. Australia, more defensive, slower, dividend focused, positive, but nowhere near the same beta to growth. CLiK takeaway. Asia isn't a trade, it's a theme. Treating it like one trade caused people to miss the nuance and the opportunity. Now to the shock of the year, silver. Gold had a great run, up roughly 60 to 65%. But silver, that's the one that turned heads, plus 150% and behaving like an equity growth asset, not a commodity. Why? Industrial demand from tech, solar, EVs, safe haven flows, and supply constraints. That's what happens when fundamentals and macro narrative align. Structure plus these factors equals momentum. FX didn't trend on social media, but it mattered. The US dollar had its weakest year since 2017. GBP had its strongest year against the dollar in almost a decade. This wasn't panic, this was expectations versus delivery. And heading into 2026, this is where discipline matters. Don't assume the trend continues because it has continued. 2025 wasn't smooth. April's tariff shock took 8 to 12% off equities in days. Liquidity evaporated. This was the test. Did you have a plan or were you guessing? And this is something we hammer home at CLiK. A trader without a risk framework is a passenger, not a driver. Risk management isn't optional. It's not the safety net, it's the foundation. 2024 was momentum. 2025 was rotation and divergence. If you chased the index, you missed the sector. If you understood themes, you didn't need predictions, you had structure. That's the environment we're carrying into 2026. Not everything up, but this works, that doesn't. Selectivity is going to matter. We don't predict, we prepare. The 5 forces we're watching: rate cuts versus inflation stickiness, sector rotation into real assets, metals continuation or mean reversion, British pound repricing risk if growth slows, and lastly, US election year liquidity risks. The market doesn't need our opinion, it needs our process. At CLiK Trading Education, we train traders to stop guessing and start structuring. If you want to build confidence, consistency, and clarity in your decision making, our next FX and CFD course runs from the 15th to the 19th February 2026 at our Lincolnshire Centre, small group, real setups, 2 instructors, proper process. This is education, not signals, not false promises, not shortcuts, just structure and skill. And finally, thanks for joining us. And from all of us at CLiK Trading Education, we wish you a successful year ahead. Have a safe, structured, and profitable start to 2026. And we wish you all a happy new year.